Another bloody day in the market where all three indexes dropped over 1% and the NASDAQ itself dropped over 2.1%, VIX spiking up another 7.1%, leaving a lot of these EV companies taking another big hit today. NIO down over 5.5%, dropping under $40 for the first time in a while. I wanted to make this video today because I wanted to talk about some of these EV companies and why I believe some of these EV companies are at a very, very good discount for the long term. Now, as we know, basically every EV company recently has been taking a massive hit with tech correcting, and a lot of these companies that are based on not future earnings but future sales, which is all of these EV companies that haven't made money that I'll be going over in this video: XPEV, NIO, CCIV. Tesla, not so much. It is profitable, but it does obviously rely a lot on future looking when we talk about a PE ratio of 1,000 for a company. Now, I want to start off with NIO because a lot of you guys have been asking about NIO, if I'm invested in it, what do I think about it, and just a lot of the Chinese EV companies. Now, first off with China, as we know, China has a big initiative on EVs and using electricity rather than fossil fuels like gas to power their vehicles. So I think China is a great sector. I think NIO is set up to be one of the best, considering the fact that China in itself actually invests in the company. Now, I'm not a huge fan of Chinese stocks, but I am heavily invested in Alibaba. As you guys know, I have about $20,000 into Alibaba. I love it. I think it's an amazing company, and I think it goes high, much, much higher in the very, very near term. But especially long term speaking, I think this is a great company. But moving on back to NIO. NIO reported earnings the other day, and it was a decent quarter. It wasn't as good as people expected, but it was a pretty decent quarter. Everything was up year over year. Everything was up. But the big issue is they're still not profitable yet. But that's okay because they're working on it and they're getting there. And they have the year over year growth to back that up. A good article talks about this, and it talks about the difference of mixed opinions that people had on NIO. Obviously, shares speaking, it tumbled. But there were some big positives that happened. Deliveries could still be set up to reach between 95 and 100,000 units by 2021 and 160 to 190 by 2022. So that's huge, and that's a lot of deliveries. That's catching up to Tesla pretty quickly, especially since this is such a newer company. Another big thing is the strong revenue growth, in addition to their services provided with their valuation backdrop, similar to Tesla's, like I said. But another big thing, like they did over $1 billion in revenue, which is obviously huge for a company. Doing $1 billion in one quarter is a lot. So, they're just going to grow and they're going to get their gross profit margins up as well. So I'm not too worried about NIO. A big issue is its valuation. Obviously, it has a pretty big market cap of about 61 billion, and that could be seen as a little worrisome. But I think the fact that China has such a big market for EV and the Chinese government is directly invested in NIO poises it pretty well to do well, especially if they expand into Europe like they want to. So I think NIO under 40 is a buy, but you have to be patient because it can take some time. And like I said, you can see big corrections as we've seen. NIO is heading really, really high. Sitting at around $60, $63 a share, and it's pulled back 38% since then. That's a huge, huge correction. That's more than a correction. But I think it's a good price now. I'm gonna wait a little bit until I have my more money cleared up. I don't have a lot. I'm only really invested in one EV company right now. But a lot of people I know, including my father, are heavily invested in NIO. They really believe in the company and they really like the company long term. So I think you can't go wrong with investing in NIO in that sense. Another one I wanted to talk about is Churchill, CCIV. They recently merged with Lucid Motors, and Lucid Motors is a solid company. And I think they're going to compete with Tesla pretty well. I do like Tesla. I think Tesla's a great company. We're going to go more into their evaluations in a little bit. And what I actually think about that. But this EV space is huge, and it's going to continue to grow. You have more and more regulations saying that 2030, 2025, 2035, complete EV sector dominated. So obviously a lot of companies are stepping up. You have General Motors, you have Ford, Honda. You have a lot of these companies stepping up and switching their initiative to making electric vehicles now. So the space is getting a little tight, a little crowded. But those who are in pole position and have established themselves are going to do better off in the end because people know about them. Lucid Motors, I think, is going to be huge, and I think Churchill had made a pretty good deal merging with them, and I believe that they're going to do pretty good. Obviously, the stock has fallen a lot from where it was. I mean, this stock was sitting at over $60 a share, and is now down over 60% from where it was at $65 essentially. So that's obviously a huge run up, but it's still up pretty well for the 6 month, as you guys can clearly see. Came in as a SPAC at around $10, shot up over 475%, and now it's sitting at about 143%. So I think it's good here. I think Lucid Motors, same thing, pretty solid. Showed a ton of strength today, considering the fact that it was up on a day where everything else was down. But I think it's a solid one, and I think you can't go wrong owning that one long term as well. Here's what I really like, actually, XPENG, another Chinese company. And as you guys know, you're going to find a lot of these EV companies are in China. You know, they're much farther advanced when it comes to the EV sector in China than we are in the US. And they're making big strides for that. So a lot of these EV companies have, like I said, have already done things differently. They're big on the battery powered vehicles and the way they do things. And I think it's really smart the way their system is set up. I really like XPEV. Honestly, I think XPEV may be my top choice out of all of these, just based on pure valuation and upside growth. You talk about a company like NIO. Obviously, it's amazing, but it's already sitting at 61 billion. It's a pretty high valuation for a car company. You talk about XPEV, it's only 23 billion, so it still has a lot more growth, and I think it definitely goes higher. My price target for this by end of next year is about $42 a share. So obviously a little bit of upside, but I think that it's going to continue to rise and rise and rise. It had a really good quarter as well, doing a lot. Like I said, growing more and more every quarter. I just want to see them get closer to profitability, but I think that's about a year or two down the road. So I like XPEV. I definitely think that's a great one. You see that thing under $28 a share, I would definitely buy it. Like I said, it's solid. It obviously had some huge growth. I mean, the stock was in the 70s and has pulled back significantly, over 60% to where it is now. So all these EV stocks have kind of done the same thing where they pull back very hard. And this can be presented as a huge buying opportunity. Now, what you guys have been waiting for, Tesla. I have mixed feelings on Tesla. It's really hard to judge Tesla because fundamentally speaking, if you just base it on fundamentals, it is extremely overvalued and there is no way you should buy this company. But when you talk forward looking and the market share that Tesla can take of being the best of the best when it comes to the EV sector, some people can justify it. Me personally, not so much. I like Tesla, like I said, I like it as a company, but I cannot buy a stock with 1,000 P ratio. I just can't do it. They had their earnings and they missed. They missed on their profit margins, and they missed on revenue, I believe, or earnings per share. They missed on earnings per share, which is obviously profitability is the biggest issue. They only did 270 million in profit for that quarter, so that's less than $1 billion for 2020, and the company's valued at 600 billion. So that's obviously, just an insane PE ratio. And I don't know. I just don't like it as a stock right now. I'm going to be honest. Yeah, I see it under 500. That's a different story. But right now, it's still in the 600s. I just find it, pretty overvalued. And the run it's had, a lot of you guys are going to be pretty pissed off about me saying that. But, it's the truth. I mean, you look at this stock. Last year, it's sitting at 144 and is now up, 400% almost. It's just too much. It's too much. It's run up way too much, and the earnings aren't the reason it's run up. I mean, it's barely grown year over year growth when it comes to revenue and stuff like that. It's not up much. I mean, 38, 39% down one. It's not up as much as it should be, and especially the net income is not up as much as it should be. So, I think if you're going to bet on an EV company, you bet on one that hasn't run up so much already. Bet on NIO, bet on XPEV, bet on Churchill. There's a lot of good ones out there that haven't run up. I mean, you talk about how far this thing can actually go. Like, you're not going to see this thing be doubling or anything like that. I mean, it's already 600 billion market cap. If it doubles, it's 1.2 trillion dollar market cap. You're not going to see these big, jumps, but a lot of these smaller ones with a market cap of 23, all right, doubling and tripling is definitely in the realm of possibility. Same as CCIV, same as NEO. NEO is obviously a little bit harder since it's 61, but I definitely see this as a $100 stock one day. So obviously that thing can more than double. So, it's just one of those things to look at, one of those things to think about. But the EV sector isn't going anywhere. It's the future, without a doubt. There's no denying that it is the future. Um, and I think it's depending on which ones you buy and when, because a lot of these are timing. You bought it a while ago and you're stuck bag holding for a while until it gets back to that price. But I mean, you buy here at $39 a share, you can see some big growth in NEO. Personally, I think under 37 is a great price. Anything in the 36s you can get, I think, is an amazing deal. But I think you can't go wrong either way if you look at the longer term perspective on these. And I think that's the most important thing, is to look long term on this. Obviously, that's what I'm doing with my portfolio. As you guys notice, I'm trying to roll all my options out. I had to buy a bunch back, but I'm trying to roll them out, long term, 2022, 2022. Just to be safe, because as we know, you play it short term, you can get slaughtered, absolutely slaughtered. And that's exactly what happened. We were sitting at 123K. Now we're sitting at 76, just like that. Bam. It happens so quickly, and you got to be prepared for it. So anyways, that's what I'm doing. I'm playing long term. And I think if you play these EV stocks long term, you have patience, you will be paid off well. So let me know what you guys think about this. Let me know what your favorite EV company is. And if I miss out, I'm sorry. Let me know about it in the comments below. But yeah, remember to like and subscribe. I'll talk to you guys next video. Bye.